Rob Van Rapports. Welcome to MBANow. There's been a lot of volatility in the economy as of late. As such, MBA has released a new forecast. Here to talk about it with us is our chief economist, Mike Fratantoni. Mike, thanks so much for being here.
Thanks, Rob. Good to be here.
So, Mike, what are we seeing in the new forecast?
So I'd highlight just a couple of things. One, the Fed's been clear. They are moving to a much faster pace of rate hikes. So we're now expecting a 50 basis point hike in May, 50 in June, and then we think they're going to continue to raise by a quarter point at each of the rest of the meetings through the year. That'll bring the Fed funds rate up to about 2.5% by the end of 2022, and we think they're going to go even higher in 2023. Mortgage rates have really already reflected that change in pace by the Fed. And so we're up above 5% now. We think for much of the rest of the year, mortgage rates are going to vary between 4.5% and 5%. So we really wanted to be out there early and let the industry know sort of our thoughts on how that higher rate path is going to impact mortgage originations. So we brought down our refinance forecast even further, now looking for about a 65% drop from 21 to 22. And we even pulled back our home sales and purchase originations forecast. So looking for a small drop in existing home sales. New home sales will still be higher in 2022. And purchase originations, we now think will grow about 4% in 2022 compared to 21. That'll be a new record, but it's a little bit lower than you saw in our February and March forecast.
There's just so much noise in the economy right now. I guess, what are you confident about in the forecast, and what are you hedging a little bit with?
Yeah, well, certainly there's still tremendous uncertainty about where rates are going to wind up. So a lot of dislocation in the market right now. So I think the thing we can be confident about is volatility in rates. And I think both home buyers and lenders really sort of struggling through that. More confident is the case for strong housing demand for at least the next couple of years. And that's really coming from demographics. So we think the underlying housing demand is there. A lot of home buyers are really facing a tough choice of go and buy a home given higher mortgage rates and higher home prices, or keep renting at a time when rents are going through the roof as well. So we are more confident in that underlying housing demand. But I think another source of real uncertainty is where home prices are headed. So we think home prices are going to grow about 6% in 2022, down from 18% growth in 21, but a lot of uncertainty there.
If you had to pinpoint one data point that you're really following, what is it?
So in terms of the housing market, really looking at the level of inventory. So we've begun to see new home inventory creep up a little bit as builders have picked up their pace of construction. But on the existing side, we're still at just ridiculously low levels, about 2 months of supply. I think it's likely that that's going to start moving up by the middle of this year. But haven't seen a real strong indication of that yet. But that's something we're going to be watching very closely.
Yeah, and as you said earlier, demand is just so high right now. So we do expect that to continue over the next few years. It'll be interesting to see what happens over the coming months. Please stop by and let us know what you're seeing.
Thanks a lot, Rob.